Hello and welcome. Let's get right into it. In this video, I'm going to talk about the differences between the Payroll Protection Program, PPP, and the Employee Retention Tax Credit. A lot of you have probably heard of the PPP program and not the Employee Retention Program, so I'm going to explain all the differences, and that way you'll be able to determine which program is better for you. And I'm going to go over a calculator that allows you to input your specific business details and to determine exactly which program to apply for, because with this you can only apply for one or the other. So it's really important that you choose which one is better for you. In most instances, the PPP program is going to be better, but there's some instances where the other one's going to be better. If you want access to this calculator that I use later on, you'll be able to download it through the link in the description below, and you can check out exactly which program works better for you. So starting with the PPP loan characteristics, let's dive right in. This is a basic overview. The maximum loan amount is 2.5 times the average monthly payroll. Now, there are eligible expenses besides payroll that could be potentially forgiven with this loan, but they use payroll as a baseline metric in order to calculate the total loan amount, despite the fact that other expenses are qualified as well. Loans will be 100% guaranteed by the SBA. Availability of credit sources does not disqualify eligibility. No application fees or closing fees. No recourse or collateral is required on this loan. The maximum loan term is 10 years with a maximum interest rate of 4%, and this loan is potentially 100% forgivable. With this maximum loan amount, it's 2.5 times the average total monthly payments of payroll costs. Payroll costs include wages, tips, vacation and sick pay, group health benefits, severance, retirement benefits, state and local taxes on employee compensation. What it does not include is compensation of individuals who make in excess of $100,000 per year. So if you have an employee who makes $200,000 a year, you're only eligible for compensation of $100,000. This does not include the FFCRA paid leave program either. On loan forgiveness, qualifying expenses are potentially forgiven in this loan. Qualifying expenses are payroll costs, rent and mortgage payments, and utilities. Now, for some businesses, that may mean 100% of the loan is forgiven. For some, that might not be the case, but either way, this seems like a great program. And for most cases, this is going to be the program that you should apply for. Now, let's compare the PPP program versus the payroll tax credits. As part of this, there's two sections: the employer deferral of Social Security taxes and the employee retention tax credit. Those can be used together, but you can't get both these two and the PPP loan. It's one or the other. So deferral of employer Social Security taxes. Employers may defer employer share of Social Security tax deposits due for the period beginning on the date of enactment, March 27th through December 31st, 2020. The payment schedule for the deferred taxes is 50% due on 12/31/2021 and 50% due on 12/31/2022. The deferral option is not available if the taxpayer has had indebtedness forgiven under the Paycheck Protection Program. Again, you can only apply for one or the other. Client employer has sole liability for payment of deferred taxes if it directs its PEO to defer payment under the provision with respect to wages paid by the PEO. A PEO is someone who does the payroll for you. For example, I use a PEO. This is who sent me these documents. I use BBSI. So basically, they can do it for you, is what it's saying, if you use a PEO. If you use one, you'll know that you use one. Onto the employee retention tax credit. This credit is available to any employer that was carrying on a trade or business during the calendar year of 2020 and with respect to any calendar quarter, had its operations fully or partially suspended due to government orders because of COVID-19, or had a decline in at least 50% in gross receipts compared to the same quarter in the prior year. The amount of the credit is 50% of the qualified wages with respect to each employee for the quarter. Maximum wages are taken into account per employee, $10,000. The max credit, $5,000 per. Qualified wages for employers with more than 100 full-time employees means wages paid to employees not performing services due to COVID-19 related circumstances. Employers with less than 100 full-time employees means all eligible wages paid. This includes the employer's properly allocable qualified health plan expenses and excludes paid sick and family leave under the FFCRA program. Basically, they don't want you to double dip and get more than one benefit from the same thing. Here's some noteworthy provisions. The credit is taken against the employer portion of Social Security taxes. Excess credit is treated as an overpayment and shall be refunded. Companies under common control are considered a single employer. So let's say you own 100% of two different businesses. That means you'll have one application, or you and another person both own 50% of two businesses. You'll be considered one employer. The pay rate may not be higher than the month immediately prior to taking the credit. No double benefit if already taking other income tax credits based on employee wages. Income tax deductions for wages must be reduced by the amount of any credit received. Reduces effective amount of the credit by approximately 21%. Credit not available if eligible employer receives a loan under the Paycheck Protection Program. Again. So here are some scenarios comparing the PPP program versus the Payroll Tax Credit Program. As you can see in all of these scenarios, the PPP loan forgiveness is better than the employer tax credit. Like I said, there's very few situations where the employer tax credit is better, but that is what this calculator helps us out with. Pull this up real quick. This is super helpful. You can put in whatever information there is about your specific business. Let's just make up some examples. Let's say your average compensation per employee is $50,000 and you have, let's say, 7 employees. We'll just leave the annual qualified health care cost at $5,000, annual rent and mortgage, interest. We'll lower that, let's say $10,000. Annual utilities, we'll just leave that at $20,000. So in this situation, the PPP program is the better program and the total loan forgiveness is $59,231 and the employee retention tax credit is $27,650. So again, the link to this spreadsheet will be in the description below. That way you can punch in the exact numbers for your business and figure out what the total loan forgiveness amount is and which program is better for you. I'm really excited about this and I'm really happy that this was sent to me and I'm able to share it. So go ahead and check that out, download it, and I hope this answers some questions that you might have on which program to choose. And thanks again for watching. Hope you have a profitable day.